Dear students, in this class we are going to discuss financial statement second need for some adjustment. Okay, so one of the very important topic, some adjustments are given in this chapter. Adjustment means after making trial balance, we found out some other transactions also must be included in the financial statement. So, such a type of additional informations, how we will treat while making the financial accounting that we are studying. And close stock. Suppose trial balance is given in the question. And after trial balance, there is an additional information. Close stock amount rupees 10,000 is given. Suppose then this 10,000 while making the financial account, where we will include this 10,000 that I am saying. So every additional information we have to consider in two areas. Okay, in financial statement, two area we have to consider. Otherwise, the balance sheet will not be equal. Okay, liability and asset will not be equal. So close stock, two places we have to consider. That is, one is the trading account credit side. First one, trading account credit side, and balance sheet debit side. Debit means asset side. Okay, so understand this one. Close stock, if close stock is given in the additional information, then you have to consider this amount in two areas. One is the credit side of the trading account and asset side of the balance sheet. And outstanding expense. First of all, you understand outstanding expense means what? Okay, outstanding expense means the expense is still to be paid, not paid yet, still to be paid. That is, suppose salary date is 31st. Then after 31st, the salary is still to be paid means we must be considered that amount is an outstanding. Okay, outstanding salary. One 31st March, 31st March completed, and next day we have to make the financial statement, and still some amount of salary is remaining to pay. Then that amount we will consider as outstanding salary, and this outstanding salary we have to add to the respective expense. That salary amount, we have to add this outstanding salary also. Salary, where we will show in the debit side of the profit and loss account. Salary is an indirect expense that is always showing on the debit side of the P&L account, and outstanding salary we have to add to that salary and show in the debit side of the profit and loss account and liability side of the balance sheet. I already told every additional information you have to mention two places in the financial statement. Okay, here outstanding expense, the first you have to show in the debit side of the P&L account and liability side of the balance sheet. And prepaid or unexpaid expense, prepaid expense. Okay, a prepaid expense means we paid in advance, already we paid. Okay, already we paid, but um, actually before the time we paid the amount in advance, that is prepaid expense. And this prepaid expense, that is in one way it is asset. Okay, already we advertisement expense, 1 year advertisement expense already we paid, that is an asset of the firm, no? So asset side of the balance sheet we have to show this amount, because we already paid some amount of expense in advance. For example, advertisement expense for 1 year, coming 1 year, next 1 year, we already paid means it's an asset of the firm that should be shown on the asset side of the balance sheet. And moreover, this amount must be deducted from the respective expense of the respective expense on the P&L account debit side. And to keep in mind, we can say like this: add outstanding less prepaid. Outstanding means expenses at वो add करना है. We have to add to the respective expense in the P&L account. And prepaid means deduct less from the respective expense. Okay, add outstanding and less prepaid. Outstanding means you have to add to the respective expense and show in the debit side of the P&L account. And prepaid expense means we have to deduct from the respective expense on the debit side of the P&L account. And prepaid expense is an asset liability side of the balance sheet. Okay. Income earned but not received. That means the accrued income. Accrued income means income already earned but not yet received. Such a type of income is an asset. That's why it should be shown on the asset side of the balance sheet. And income, that's why P&L account credit side we have to show. Okay, income earned but not received, that's we call accrued income. Income earned but not yet received. Not yet received but income already earned, that's why it is an asset. It should be shown on the debits in the asset side of the balance sheet and credit side or income side of the P&L account. And income received in advance, any income received in advance means is a liability to the firm. Okay, before we earn income, that income already reached in the firm, that means it is a liability to the firm. That's why it's shown in the liability side of the balance sheet. And it must be deducted from the respective income on the income side of the P&L account. Okay, profit and loss account income side, and income received in advance we have to minus. Okay, these two things, income received in advance or accrued income, these two things, what is the difference between these two things? One is income earned but not received. Income received in advance means income not earned but received in advance. Okay, this is the difference between these two terms. In accrued income means income earned but not received. And another income received in advance means income not earned but came in advance. So like that income we consider as a liability. So liability side we have to show. And depreciation of machinery, you already studied these all things. So depreciation and expense, indirect expense, it must be shown on the debit side of the P&L account. And asset side deduct from the respective asset. Suppose machinery 10% depreciation, then machinery value 10% we have to calculate and shown on the debit side of the P&L account, and this 10% must be deducted from the machinery account and shown on the asset side of the balance sheet. And provision for bad and doubtful debt. Okay, provision for bad and doubtful debt. It should be it is expense. Okay, indirect expense. It should be shown on the debit side of the P&L account, and it must be deducted from the debtors. Provision for bad and doubtful debt. Two area there will be. One is debit side of the P&L account and deduct from the debtors on the asset side of the balance sheet. Managers commission. Managers commission. It's also expensive, giving money to manager. Okay, manager commission shown on the debit side of the profit and loss account and shown on the liability side also. And manager's commission can be calculated in two ways. Okay, profit after manager commission and before manager commission. Profit after manager commission means after means suppose the 10% manager commission is given as additional information in the question. Then 110 rupees, 110 rupees profit, 10% manager's commission. Then what will be the answer? After charging profit after charging manager commission means 10 by 110 we have to consider. Profit into 10 upon 110, 100 plus manager commission. Okay, and before charging means profit into 10 upon 100. Okay, 10 upon 100. Before charging manager's commission is given in the additional information, then profit into rate of commission divided by 100. But after means rate upon 100 plus 10. That means 110 we have to take. Okay. And it is shown on the debit side expense. That is, it is shown on the debit side of the P&L account and liability side on the balance sheet. Interest on capital. Interest on capital is an expense. Okay, it's an expense. Giving interest on capital. So shown on the debit side of the P&L account and adding to the capital, by adding to the capital on the liability side of the balance sheet. And further bad debt. Okay, further bad debt is always an expense. It should be shown on the debit side of the P&L account and deduct from debtors on the asset side of the balance sheet. These 11 additional information or adjustment you have to study very well. If you have any doubt, ask me through the WhatsApp. I will explain once again. Okay.